Hello everyone, welcome to Insurance Business TV and the latest edition of our Construction Insurance Power Panel. We'll be delving into the risk landscape, sustainability, mass timber and more in today's edition. But first of all, let's meet our panellists. They are Sam Hiller, Partner in Construction at Gallagher. Sam Baker, Vice President of the Global Construction Practice at Lockton. And John Thacker, Chief Commercial Officer, Construction and Infrastructure at Aon. So welcome everyone, and let's start by looking at that risk environment. We're seeing planning authorities such as the City of London Corporation urging developers to prioritise refurbishment over demolition to reduce embodied carbon. So from your perspective, how is this shift changing the risk landscape for construction insurance in the UK? And indeed, if refurbishment is to become the norm, what are the most pressing insurance challenges that brokers should be aware of? Sam B, I'll start with you.
Hi, Paul. Good to be here again after missing the last panel session. So looking forward to getting involved in this one today. Got some good questions. I thought with this question actually is interesting, and I wanted to, as you've probably known by now, I like going off on tangents, actually start with a tangent, because obviously I totally understand the need for us to prioritise this in building and the materials to avoid the wider emission of carbon. But we're obviously talking regularly with our clients on this, and it's never as straightforward as just reusing existing buildings to be more sustainable, because it's not automatically the greener option. So of course you're going to avoid massive carbon and demo, the new concrete, steel production, etc. But where you're looking at reusing existing structures, they can be quite complicated projects to make them work. So you might need deep structural interventions, new cores, facades, etc. And you have the fact that a lot of buildings that are being reused that aren't actually very energy efficient. So even after the retrofit, they struggle. So I think it's worth noting that where we're looking at making our construction and building greener, we do need to look at the full life cycle beyond construction, how it's going to perform operationally throughout the period of the building's life cycle, was my first point. But going back to the question that you actually asked, which is what you wanted me to answer, I think that the change in risk landscape resulting in there's going to be more complexity and uncertainty to these projects, in my opinion. You naturally have a risk that you don't have in new build projects, whereby you're utilising potentially old existing buildings. You don't know what structural defects are going to be in there, hidden defects. And that sort of leads on to potential issues that you might have from an insurance perspective. The existing structural defects within retained structures are generally excluded within insurance policies. So having brokers engaged on this, understand the risk, early engagement in general, I think that's probably going to be a theme of today's call with respect to how you structure the program and the reasons for those early engagements. But looking at the hidden defects, for example, making sure you have a specialist broker that's able to at least provide what is the widest level of cover, so the consequential loss as a result of the hidden structural defect. But I think that's really how the landscape is shifting. I think that the projects can become riskier, and the broker's advice around insurance of that remains even more imperative in reusing existing structures than maybe in more straightforward new builds.
Yeah, great overview there from Sam, John. And of course, I imagine with this sort of change in approach, there must be quite a lot of congestion in the London market in particular right now.
Absolutely, Paul. I mean, look, we fully understand the concept, the City of London looking to reduce the carbon emissions. But the City of London's retrofit approach doesn't mean the reusing existing buildings will always be the answer. I mean, as you say, London itself is congested and refurbishments are not always the best option. It's understood that there may be specific areas where refurbishment is not feasible or appropriate due to structural or design issues. I mean, one of the main things as well from the risk landscape, especially from a construction insurance, is not just necessarily the refurbishment and bringing in these new particular items, whether it be the carbon, whether it be the timber, but it's also the insurance implications. Insurers are not always willing to insure the existing structure to the full value. And you also bring into that an option C under the JCT that normally puts the onus on the owner to insure the existing building. If the owner is not actually the developer in that instance and the tenant, we get into a multitude of areas, certainly a can of worms that both the Sams have and us and ourselves have always come across when you then try to insure the existing building, the works themselves, and even the liability issues. So it's, the landscape's changing, but there's still the same concept of who insures the building, whether you have a waiver rights from the building insurers themselves, and other issues as well. So the landscape may be changing, but the construction insurers are still seeing the same issues that they have to overcome every single time.
Okay, so perhaps the same issues for the insurers, but I'm just wondering, Sam H, to bring you into the conversation as well. Does this sort of change the considerations and the advice that you give when you're referring specifically to refurbs?
Yeah, thanks, Paul. Just to add to what Sam and John have already said, but I think it may not be widely appreciated client side that the insurance market is made up of many different specialist areas, construction, property, liability, latent defects, and more. So it can be challenging, and refurbishments kind of can fall between the gaps, basically. Generally speaking, a construction insurer's core appetite is insuring new builds of traditional frame. And equally, a property insurer's core appetite is insuring existing operational assets that aren't being worked upon. So there can be nervousness from insurers on refurbs, as reinstatement can be a bit slower than compared to new builds. And understanding the costs associated with retrofitting modern services onto old infrastructure can be unknown until there is a loss. There's been lots of big high-profile refurbishment claims in recent years. The sector was at the leading edge of the hard market, which we're now coming out of, which is great. But yeah, so it's also especially challenging for listed buildings. And also latent defects, really is designed for new builds, like Sam mentioned. So it can be a bit more tricky on refurbs. Just to finish off, it can help if clients, where the reinstatement value of the existing retained structures is less than the new works value. Ideally, the existing structure will be less than 40 years old, and ideally not listed and also unoccupied during the works.
Of course, it's not just refurbs that are catching the eye at the moment. Sustainability, of course, is driving interest, particularly new materials such as structural timber. So what specific risks, John, around fire, water, durability, do you think insurers and brokers should be considering when advising their clients on these projects?
First of all, Paul, a theme that you'll hear through this podcast is early engagement. In fact, the earlier the better, from the project team, the clients, through to the brokers and the insurers, to make sure that everybody's comfortable when it comes to these, the new materials, especially structural timber, but also low carbon concrete as well. I mean, we know these will be introduced into projects. There's less likelihood of the application of these within refurbishment projects, but certainly within new builds, both will be a consideration. Insurers will need to build into their rates and the cover they provide. So some of the risks: fire damage is a substantial risk, and we will touch on the timber playbook later on in the podcast. But in the event of fire, timber will withstand, we're told, on average 4 hours of fire. However, there is the issue of charring. So, it does withstand it, but then what happens, going forward in relation to the timber within the particular building? In the same way, water damage, it also has its concerns. It's not from flooding, but from the escape of water. We've seen this within many refurbishments, within existing buildings and within new buildings. But water damage can take longer to resolve during the drying out period than maybe fire. So both are big risks that insurers need to actually consider, certainly within, with regard to these particular projects. Now, structural timber will be introduced more into buildings, but with the question of the durability and the life of the building. Will timber last as long as concrete and structural steel that we've seen in many other projects and many other buildings? Insurers work on claims data, and there's not enough claims data to currently satisfy them to make sure that they're fully aware and they're fully able to rate the projects on the same basis as maybe, other projects they've seen before. So this is where the earn engagement and the project teams working with brokers and insurers to explain the methods and the design makes insurers more comfortable.
Well, John's mentioned some huge risks there, Sam H. Any issues with timber that stand out in your mind?
Yeah, thanks, Paul. First of all, like you say, all parties involved in construction projects, have an ever increasing focus on environmental, social, and governance factors, particularly developers and their investors and shareholders. So, like everyone here today, we want timber buildings of any size to be insurable. But John's right; it's an old cliche, but talk to your broker early. What have you got to lose? Timber, there's less capacity basically, so you need several insurers and much more considered risk management strategies, because of insurers' ultimate view that it is more susceptible to fire and water damage than concrete and steel. And then to finish off being a bit nerdy, but as insurers are often extremely cautious when considering such risks, it's essential that the client and the project team confirm and commit to insurers early in the design that the key risk management factors will be adhered to. So Construction Insurance Risk Engineers Group guidance for managing escape of water, pretty standard these days, but a comprehensive site-specific water management plan should be a deliverable. More recently, insurers are insisting on receiving copies of water systems management plans, which are compliant with the Joint Code of Practice Escape of Water Guidance, published in August last year. It really helps if you can get the site team to produce a moisture control plan that's agreed by both the timber installation contractor and the main contractor, detailing the inspections around handover from the installation company, and also using real-time moisture monitoring systems. These are the kind of things that are music to insurers' ears, and it's quite essential if you're going to do large, ambitious timber developments. CIREG, Construction Insurance Risk Engineers Group, CIREG, they've got guidance now on managing flood risk. Obviously, the Fire Protection Association's Joint Code of Practice on fire prevention on construction sites. And then you can get into lots of detail on hot work, security, storage and materials, but hopefully that gives people a bit of an overview.
Yeah, and indeed a great overview from John and from Sam. So to the other Sam then, anything to add on this? Have they left you with anything?
When we got looking at some of these questions, I thought whoever went last on this one would definitely be drawing the short straw, because we're all going to say similar things. It's whilst it does feel like a well-trodden path, well, at least a well-discussed path, we obviously know there's still reluctancy in the insurance market for insuring timber risks. Now, this is a reason why we're discussing it now, but it goes back to the saying, amongst others that we've mentioned, I'll continue to mention, but your fire and water. And I'd like more education around it, and I'm the fact that we're still sitting here where we are so far into having so many projects that have been undertaken with utilising structural timber. I said in I thought it was another previous panel, our previous panel that we had, Paul. I cynically said that insurers' view of the fire risk of structural timber was, well, it's fire and it burns and that's it. And John went a long way of explaining that it's not as simple as that, actually. We do have improved testing and modelling around that. However, what does happen with respect to the charring leaves some uncertainty there, and it's an education piece still, and I think that's happening a lot slower than it should be. So more information that we can get out of that, the more the industry pushes towards that, the better understood these risks can be, the more chance we're going to be able to insure them in an easier manner. But as we stand here now, you obviously got the fire and water risk. You've got the installation risk as well, controlling the moisture. Workmanship itself is obviously critical with projects like this. And I think it was John, from memory, alluded to the fact that the durability data is limited. So we're talking a little bit around the construction, but we also have the long-term property piece. So once that building is complete, real estate insurers are going to continue insuring that throughout the future. And we don't have a huge amount of data on that durability. So could we actually question that the bigger risk from an insurance market perspective is the completed building rather than the actual construction risk, and that's where you bring into play the long-term maintenance plans and how essential they are with satisfying insurers, and all of that just draws back to that early engagement with specialist brokers to be able to provide sufficient information, all of the various risk management plans that the guys have all alluded to that I'm not going to go over. The importance of that can't be understated, because that is very much the difference between a project either being insurable or not insurable, or if it's definitely insurable, if it's going to be at favourable terms or very unfavourable terms. That can make the difference, Paul.
Well, let's continue on the timber theme if we can, gents. We've seen initiatives like the Mass Timber Insurance Playbook, hybrid timber concrete solutions, and even Aviva launching enhanced mass timber coverage. So Sam H., how much progress are these efforts making in terms of giving the market actual confidence?
Thanks, Paul. Yeah, I mean, these guidebooks and playbooks are great. They're really helpful ancillary tools that we've had lots of positive feedback from the wider construction industry. And we've been heavily involved in many of them, including the Commercial Timber Guidebook. Turning to insurers, sometimes their sort of underwriting appetite doesn't necessarily align perfectly with their wider sort of corporate sustainability messaging and environmental targets. So we've had some tricky questions in recent years from frustrated clients, suggesting there might be a disconnect in some insurers, between the sort of actual trading level underwriting versus what's going out on LinkedIn and things like that. But there are many insurers out there who continue to underwrite timber schemes, which is great. And I would encourage clients to understand who they are and to sort of get close to them and work with them. And for industry, we've been involved in several significant hybrid timber schemes, which is great. And there are a large number of timber water damage claims happening at the moment. One huge one in particular that I'm sure everyone knows about in the UK. But there is positive progress and lessons being learned, which is fantastic. And like Sam said earlier, there's a big uptick in hybrid timber schemes. And what we mean by that is, 10, 20, 30% of the structure may only be timber and the rest may be traditional, steel. But it's a step in the right direction. And there's a lot more kind of appetite and capacity in the market for those hybrids.
Yeah, let's just zoom in on that a little bit more, if we can, then to the other Sam. Are you indeed seeing better traction with those hybrid projects overall?
Yeah, we definitely are, and I mean, unfortunately, we are seeing. I've seen a fair few schemes that have started with mind to construct it on a full CLT type basis. That, as a result of the process throughout planning, from the initial feasibility studies, from discussing with insurance brokers, etc., actually then transforming into a hybrid scheme because of feasibility of the project, because of insurability of the project. So whilst it's good that it's definitely a step in the right direction, that we've been able to make a building here be built more sustainably. I am seeing the schemes that were actually going to be sort of CLT moving into hybrid because they are able to. They're just not viable in the form of a full CLT build. So that's a shame, but we've got to make progress little by little, and I think that's probably where we are at the moment. It is little by little. Your question was around all of these various initiatives, the mass timber insurance playbook, etc., and how much progress that's making. And I think it's hard to quantify. As Sam said, you hear a lot of mixed messages, whereby we'll hear an insurer come out and make some really good noise and go, right, fantastic, okay, but then we put a project in and we're not getting the same keenness to underwrite that on a commercial basis, and look to provide favourable terms around it. So there's a bit of disparity between some of the messaging, which I think makes it hard to gauge how much progress is actually being made. But there is appetite out there from certain insurers. We are getting schemes home. We are progressively getting larger schemes home. Obviously, that's very much dependent on the risk management information, how that's presented, etc. But we're seeing we're hearing even some good noises. I would just like to see a little bit more action in that regard, so we can start getting even bigger schemes home and have less projects that start on the basis of a CLT and end up having to move to hybrid because insurance has been a bit of a blocker.
Okay, so we're seeing good noises then, John, but how much of this is being influenced by the fact that we're in a soft market right now?
Well, I mean, exactly that. I think we've mentioned that, we have entered a softening market. With that, we've seen new entrants, and also insurers with a greater appetite to write projects. But again, as Sam has said, both Sams have said, it's still with, so not necessarily, insurers are cautious. They're still cautious around anything new. And, dare I say it, prototypical. I know that this is not necessarily prototypical, but whenever we start to see new things, insurers are cautious. You don't want to be very, negative in relation to this. But, the initiatives within the mass timber insurance playbook that we mentioned, they've alleviated concerns. There's also the 16 steps within the fire safety requirements insurers require as part of the terms provided. So we're moving forward. As Sam's mentioned about the fact that, standard CLT projects moving more back into hybrid. Insurers are still looking at the fact that they will write hybrid timber concrete projects. However, line size may be more conservative. We've picked up on that previously. And it's the fact that, for more straightforward projects, there may be, depending on the size, there may be only a handful of insurers that will want, we will need to actually involve to write the project and get the project home. When it starts, we start talking about timber, we're talking also about concrete and everything else. It becomes questionable because of the data that we mentioned before. And we may then need to start looking at line sizes from particular insurers and actually doubling the amount of insurers that will actually be involved with that. So, you mentioned, I think earlier, about Aviva launching their actual mass timber coverage. Yes, they are, but they're also with caveats. And I think a lot of that surrounds whether, it's with repeat business with existing clients or whether it's a new approach. So I think, again, as I mentioned in, I think, one of the earlier questions, there is still early engagement, understanding and making sure insurers are aware of exactly what they're looking to insure and, and looking at the coverage that they're able to provide.
Let's bring all of this together then, if you don't mind, John. Of course, we've talked about refurbishment mandates, mass timber adoption, evolving insurance responses. What practical steps then can clients take to future-proof their projects and cover in what is obviously a rapidly changing environment?
Well, I mean, I think probably, as you rightly say, Paul, to wrap this up, the use of modern construction methods in the UK continues to be a key focus area for insurers. As these methods start to develop, which of course they will, the lack of key loss data has caused challenges to insurers when considering risks and their ability to participate and provide cover for evolving construction projects. Added to that, high-profile major losses have caused challenges surrounding these modern methods, as insurers need to seek comfort around the contractor supply chain, experience, and the risk management controls that are implemented. There has, however, been a shift in the insurance market cycle, as we've rightly said, and there is a softening. It's been a softening over the past 18 to 20 months, and insurers are taking a more pragmatic view as they consider their capacity and their appetite in these evolving areas. We've also seen new entrants, again, as we mentioned before, into the construction insurance market with capacity and desire to consider writing these new risks, this gives a greater hope for new projects that will be undertaken as we move into this ever-evolving world.
And stuff. And Sam B, just shed some light for me on the sort of discussions that you're having with clients around these issues.
Yeah, it's the discussions vary. To be honest, Paul, with respect to you're very much established owner developers that have got large portfolios and traditionally haven't built in that way, but are looking to your new entrants to the property market who are sort of coming together to undertake their first build, but they're trying to make it as sustainable as possible. Is trying to become a bit of a USP maybe for them. But I think I want to encourage your owner developers to understand the differing approaches and what they really mean, rather than just picking one because it sounds like the right idea. Because as we say, we're seeing them go down a certain route and then that having to change, for example. So as I mentioned right at the start, bringing it back there, that reusing existing structures, as an example, isn't always necessarily going to be greener than a new build, depending on how the reuse of that existing structure is going to work. With respect to the risk, changing from traditional builds isn't going to remove the risk, it's just going to shift the risk. So your new builds, they're very predictable now. Of course, you've got your known issues with concrete, with cracking, shrinkage, movement. You often find issues that are coming from potential design, workmanship, there's poor pours, etc. The actual commercial side of it, slower construction before you're actually built and earning money or selling the asset, etc. Then you have reusing existing structures. You have the historical problems, the potential hidden defects, unknown materials, things that could manifest throughout the project which weren't realised from the outset when deciding to utilise it. CLT, you're swapping your concrete and steel issues with issues around timber, with your moisture, fire performance, delamination, etc., etc. So just understanding before jumping into deciding to design a project in a specific way, and with that understanding comes that early engagement from us. Where we keep mentioning it, but it is very important, because the insurability of a scheme, how much that's going to cost, both from the construction side of things during construction and then post completion, it's imperative as to how viable a scheme's actually going to be. So that early engagement, us being able to shape how we submit that risk to the market, advising on particular areas of the design that might be able to be tweaked, and the risk management that might be able to be tweaked, because we have the experience in knowing what insurers are going to want to see, what's going to look positive for them when underwriting this risk. And as John says, right, we have been a little bit negative with respect to the insurability of some of these MMC type schemes, your timber utilising existing structures, not being MMC, but being more carbon efficient. We are in. I like to call it a buyer's market now, right? We've gone through a period of hardening previously. It was a more difficult market to operate in. We have new entrants. We have people willing to write risks. So I stick by. It's currently a buyer's market with the right advice from insurance brokers. We have people that are interested in underwriting these schemes and getting in early with them, partnering with them, getting them to buy into your business. There's always a way to bring out some great results. But I'll wrap off with what I've said a million times already. The early engagement and advices remain key in achieving those results.
Well, let's talk about the ways to get those results then. Sam H, if you don't mind, maybe we'll just wrap up with some quick fire tips.
Yeah. All developments are unique and require their own bespoke risk management strategy, depending on the risk features. And ultimately, insurers are, reliant on the relevant experts within the project team to design the project. But yeah, some quick fire sort of practical tips on timber schemes. We've touched on moisture control plans and the importance of presenting a clear and considered risk management approach to insurers during design. Also detail how the timber will be protected from water damage. For example, temporary waterproofing, application of membranes, the surfaces and edges. Water damage is now the biggest cause of loss for construction insurers over fire. Appoint a specialist timber subcontractor early in the process. Demonstrate how all tendering contractors will be contractually obliged to comply with the best practice guidance we touched on earlier, CIREG and things like that. And then one that cropped up recently for me was, if you're doing a major structural timber development, don't have a flat roof. Because of water pooling on it, but if you insist on doing a flat roof on a timber job, have a sufficient pitch. And then finally, turning to refurbishments, again, practical tips you mentioned. So, it's really important, and it's amazing how often this isn't done, but clients need to carry out really extensive investigations of the existing structures before starting the refurbishment work. So any undiscovered damage or asbestos can be factored in during design and minimize delay risk. We've seen some horror stories where people just crack on with refurb, especially on old listed buildings, and then they start the project and they're shocked to see the actual true condition of the building, which just causes everyone problems, and ultimately adds delay and adds cost to program and projects. And then practical things, give a condition survey of the existing building alongside a plan of what will be done to fix any damage and minimize the risk. And then, leverage your wider property market relationships. Sam mentioned, owner and developer clients and doing bespoke projects, but generally a lot of those clients have wider portfolios in the property insurance market. So if we're sort of leading with a one-off unattractive insurer's eyes project, going in and arming your broker with that leverage of the wider relationships with insurers really helps.
Well, some great tips there, and indeed another wonderful panel. Huge thanks to you all for your time. Remember, they will be back together to wrap up the year, but until then, keep it right here at Insurance Business TV.